As expected by, well, everybody, at its late March meeting, the Reserve Bank Board left the cash rate unchanged at 4.35%. Inflation is coming down, broadly on the trajectory that was in the Reserve Bank's most recent forecast round. Growth is slow, but the Reserve Bank expects that this is needed because they believe that the level of demand is above the level of supply, and they're trying to bring these together. But they have been heartened by the recent declines in inflation, and they have changed their language significantly relative to the media release last month. Last month, they didn't rule a rate hike out. This month, they're saying they're not ruling anything in or out. This is the language that emerged during the media conference after the last meeting, and the board have retained that language this month. The board is still very cautious though, and it's mindful of the uncertainties around their base case forecast. There are uncertainties on both sides of the ledger, and that's why they're not ruling anything in or out. They're conscious that growth is slow and that households are hurting. But they're also concerned about rising unit labour costs and whether or not productivity growth does pick up as they expect. The board is still committed to ensuring that inflation comes down and back into the 2 to 3% target range, but it no longer expects that it will need to take further policy action to do so. At Westpac Economics, we continue to expect that this means that the Reserve Bank is likely to be on hold for a while yet. By the time we get to the late September meeting, the Reserve Bank will have the full suite of data about the first half of this year, and we expect that it will have had enough reassurance that inflation is coming down on the trajectory they want, and that will continue to do so. It will have seen productivity growth continue to pick up and wages growth start to slow, if indeed things turn out as they expect. The board is still mindful that there are risks on both sides, and they are cautious about the uncertainties. But we think it is likely that they are going to stay on hold until those uncertainties are resolved, and we've become more confident that the next rate move is down, but no earlier than September.